This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. We are TheStreet.com.
No, I think this time's different. I think they should be concerned.
Warning shot. The president has that word of advice to Wall Street and investors. Be concerned. This stalemate is different. But even as the president calls both sides to the White House to try to end the standoff, are the markets losing confidence that a deal can get done?
Applying pressure, Wall Street CEOs issue a warning to Washington. Failure to raise the debt ceiling could lead to extremely adverse consequences.
Into the unknown. Big changes are coming to the healthcare system, and we ask one of the nation's top hospital CEOs what he's doing to prepare. All that and more tonight on Nightly Business Report for Wednesday, October the 2nd. And good evening, everybody. I'm Bill Griffith, in tonight for Tyler Matheson.
And I'm Susie Garrett. Good evening, everyone. On day 2 of the government shutdown, President Obama talking tough and acting tough. The president called together the leadership of both chambers of Congress in an effort to find a solution and get the government up and running again. And he met with a group of powerful bank CEOs to discuss the risks to the financial system. Then, in an exclusive interview with CNBC, the president singled out what he calls a small faction of the Republican Party and says he's willing to negotiate after the government is open for business again. Our John Harwood sat down with the president today, and he joins us now from the White House. John, over to you. What happened?
Susie, one of the things that's been confusing to people is what exactly is the president willing to negotiate on and when? Here's what he said.
Well, I'm prepared to negotiate on anything. I think it's important for us to talk about how we create a budget that is creating jobs, encouraging growth, dealing with our long-term debt issues. The deficits are coming down at the fastest pace since World War II. They've been cut in half since I came into office, but we still have some challenges in terms of our long-term health care spending on Medicare in particular. So whatever the leadership wants to talk about, we've got a budget, and we think we've got some good answers, but we don't expect 100%. But what I've also said is that it is not acceptable for one faction of one party in one chamber to say either we get what we want or we'll shut down the government, or even worse, we will not allow the U.S. Treasury to pay its bills and put the United States in default for the first time in history. So the message I have for the leaders is very simple. As soon as we get a clean piece of legislation that reopens the government, and there is a majority for that right now in the House of Representatives,
no negotiation until after that?
Until we get that done, until we make sure that Congress allows Treasury to pay for things that Congress itself already authorized, we are not going to engage in a series of negotiations. And the reason, John, is very simple. If we get in a habit where a few folks, an extremist wing of one party, whether it's Democrat or Republican, are allowed to extort concessions based on a threat of undermining the full faith and credit of the United States, then any president who comes after me, not just me, will find themselves unable to govern effectively, and that is not something that I'm going to allow to happen.
Wall Street's been pretty calm about this. The reaction, I would say, generally speaking, has been Washington fighting, Washington posturing, yada, yada, yada.
Yeah.
Is that the right way for them to look at it?
No, I think this time's different. I think they should be concerned. And I had a chance to speak to some in the financial industry who came down for their typical trip. And I told them that it is not unusual for Democrats and Republicans to disagree. That's the way the founders designed our government. Democracy's messy. But when you have a situation in which a faction is willing, potentially, to default on U.S. government obligations, then we are in trouble. And if they're willing to do it now, they'll be willing to do it later. One thing that I often hear is, Well, Mr. President, even if they're being unreasonable, why can't you just go ahead and do something that makes them happy now? And I have to remind people—
Or the constitutional option.
Right. What I have to remind people is that what we're debating right now is keeping the government open for 2 months. We would then be going through this exact same thing in the middle of Christmas shopping season, which I don't think many businesses would be interested in. We saw what happened in 2011, and then we'd have to go through it again 6 months from now and 6 months after that. And one thing that I know the American people are tired of, and I have to assume the vast majority of businesses are tired of, is this constant governing from crisis to crisis.
And the leadership of Congress, bipartisan, is meeting with President Obama tonight. We will see whether they can make any progress, but it looks like both sides digging in for a while, at least a couple of weeks as we head up to that debt ceiling deadline.
So, John, we shouldn't be holding our breath that something's going to come out of that meeting tonight. I mean, where is this all going? How's it going to end?
I think the administration is hoping for pressure on John Boehner, the Speaker, of sufficient volume and intensity that he will put on the floor a clean extension of government funding and then begin the negotiation process. The challenge is, of course, the president said he wants that done on the debt limit as well. That's also difficult for the Speaker to do. I suspect that we will get that debt ceiling raised, but it's going to be a wild roller coaster ride until we do.
John, do you think this will become the norm in the future budget negotiations down the road? The president talked about that, where we talk constantly about the deficit, about the debt ceiling, and about things that really are not germane to the budget itself. Adding all of these things to the negotiations before we can actually get our resolutions going, our spending.
The president's purpose, Bill, is to make sure that doesn't happen again. He called it breaking the fever. He said we've got to break this fever now, because if we don't, it is going to be a permanent vulnerability for a president who could be held hostage by demands of this kind. So that's what's behind his hard line. What's behind the Speaker's hard line is the political pressure that he's getting from hardliners in his caucus at the threat of losing his job. And the administration hopes that his line and pressure from Wall Street, from voters, from Republicans nervous about next year's election are going to ultimately overwhelm what's blocking the Speaker from moving right now.
John Harwood, as always, great job with the interview with the president today.
Thanks, Bill.
Thank you. And as we mentioned in that interview, President Obama did talk about a meeting today with top executives from some of Wall Street's biggest banks, a politically diverse group of unlikely allies in efforts to get Congress to raise the nation's borrowing limit, despite opposition by some to funding the president's health care plan. Here's what Lloyd Blankfein of Goldman Sachs had to say after that meeting.
Individual members of our group represent every point on the political spectrum. But the one thing they have in common is you can litigate these policy issues, you can relitigate these policy issues in a political forum, but they shouldn't use the threat of causing the U.S. to fail on its obligations to repay its debt as a cudgel.
Now, Eamon Javers was at the White House before and after those Wall Street titans met with President Obama, and that's where he joins us now. So, Eamon, when you talk to those bank leaders, what do they think that they accomplished in their meeting with the president today? What did they tell you?
Well, they came out after the meeting and they said that they agreed with the president that they do not want to see any breach of the debt ceiling here by the United States coming up to that October 17th deadline. But one of the interesting storylines here today going into this meeting was or was not Jamie Dimon of JP Morgan going to appear here today at the White House? Because remember, just last week he was negotiating with the Department of Justice for a potentially massive settlement of alleged wrongdoing by JP Morgan. Would a banker who is negotiating such a record settlement show up for a meeting with the president? He did today, and I had a chance to ask him on the way in whether or not this was an awkward moment for him. Take a listen. What do you make of this moment where you were here last week negotiating on a major settlement for JP Morgan, and now today you're here to talk to the president about a political matter? Is that awkward timing?
No, not for me.
Is it for the White House?
I doubt it.
So Jamie Dimon, fairly blasé there about the significance of this moment, obviously wearing a bunch of different hats in different capacities today in a political deal-making capacity here at the White House. And obviously what that speaks to is the fact that the White House needs these guys. They need Wall Street to go out and spread the message up on Capitol Hill, particularly among a potentially receptive Republican audience, to say this debt ceiling is just not something that we want to see anybody messing with here in Washington, guys.
Well, you know, first of all, for Jamie Dimon, he's such a class act. He's a real professional. He handled that interestingly. But, you know, it is ironic that, you know, Wall Street bankers and President Obama have not had a great relationship, and now they do have this. They become new allies. I mean, looking down the way, what role can they play in these current negotiations and to help the president and the country?
Well, look, it's sort of a coalition of the willing here in Washington right now. The president is rallying anybody he can to go up and make that case, particularly people he thinks that the Republicans might be receptive to. And that's definitely the case with some of these Wall Street executives, although not all of them are necessarily Republicans themselves. John Harwood, in his interview, asked the president the same question, whether it was awkward or not to be meeting with Jamie Dimon at the same time all this settlement talk is going on with J.P. Morgan. And the president said, look, I'll meet with any CEO I can to help make this case.
Well, that's a very interesting development. Thank you so much, Eamon. Eamon Javers reporting from the White House.
You bet.
Turning now to Wall Street, it was another down day for stocks. The stalemate in Washington, fears about an extended shutdown, and a disappointing report on jobs all weighed heavily on the markets during the day. Payroll firm ADP reported 166,000 private sector jobs were added to the economy last month, but that was fewer than had been forecast, and the figures for July and August were both revised lower. So by the close, the Dow was down 58 points, was down much more than that earlier. The NASDAQ dropped almost 3, and the S&P was off by a point today. Joining us now to talk about what day 2 of the government shutdown means for the financial markets and your investments, Jeff Kleintop back with us tonight, Chief Market Strategist at LPL Financial. Jeff, always good to see you.
Hi, Bill. Thanks for having me.
What did you make of the president's comment that these negotiations are different this time and that Wall Street should be concerned about that?
Well, I think the president would like Wall Street to put a little pressure on the Republicans to act. And the fact is the markets really haven't done a whole lot of that. The Russell 2000 is just a fraction of a percent off its all-time high. The VIX index at 16, nowhere near where it was in August of 2011, the last time we had real debt ceiling discussions. And the discount rate on the 1-month T-bill, 7 basis points. Certainly the markets collectively not putting a lot of pressure on Washington to act. I think the president wishes that were not the case.
So, Jeff, do you think things are going to be different tomorrow? I mean, up until now, the attitude from Wall Street is, you know, long term, everything's going to be okay. This is like a short term blip. Do you think investors are going to react differently after hearing what the president said today?
Well, I think every day we go on, no matter what the president or other lawmakers say, I think we will get more pressure from the markets on Washington to act. I mean, there's a gravitational pull the longer this goes on, particularly the closer we get to October 17th. But yes, I think tonight, maybe there was some hope later today as stocks rallied a little bit that there might be some breakthrough this evening, or the president might offer some concessions, and that clearly was not the case. And so markets may pull back a little bit. But remember, investors have been trained this year not to sell stocks into short-term political uncertainty. We saw it with the fiscal cliff tax increases, the sequester, lots of things, and yet stocks continue to power higher. That's an important lesson.
But as we know, the word in Chinese that for crisis is the same word as opportunity. Does this present an opportunity for investors when you even bear in mind that the longer the shutdown goes, you're shaving that much more growth from the economy?
Well, you're right, Bill. An opportunity may present itself here, and I think we're looking for those. We haven't put any additional money to work in the last couple of days, but certainly did ahead of this as markets pull back. But the bottom line is this: to the extent to which the shutdown and worries over breach of the debt ceiling affect the real economy, affect guidance on profits as we get those reports about a week from now, Alcoa kicks things off, you know, that's going to be where it really hits the road, and we really need to see what is the impact of all of this. Because because in the near term, it's really just headline filler.
But in the meantime, also, there are going to be a lot of government reports that investors are not going to be getting, starting with the important jobs report this Friday. And the Federal Reserve is also going to be sitting on its hands to some extent because it doesn't have all of this information. How is all of that going to impact investor confidence, what they do with their portfolios, not knowing what the Fed's going to do, not getting the economic data that they crave?
Yeah, certainly not getting some of those reports is important here. We've been paying such close attention to employment reports, given that the Fed is close to tapering, and not getting one on Friday. Certainly an issue of uncertainty for the markets that they're going to have to deal with. But, that means more emphasis was put on today's ADP report, which Bill had mentioned, a weaker number. Stocks were weaker today. Yesterday, we had the ISM report, a stronger than expected number, and stocks were up. So I think the market will make the most of the data points we get. We'll still get jobless claims, which are trending in the right direction. We'll still start getting profit numbers in the coming weeks. That's probably even more important. So there won't be a shortage of data, but certainly some of the data points that the market's used to getting won't be there, and that will raise a little bit more uncertainty. And that's why the longer this goes on, the more there's a gravitational pull in the markets to the downside to put pressure on Congress to act.
Jeff Kleintop, Chief Market Strategist at LPL Financial. Always good to see you. Thanks, Jeff.
Thanks.
Still ahead on the program, the Cleveland Clinic is considered a model for the healthcare industry. We'll talk with the man in charge about the new health law and what it means for the future of care. But first, how the international markets closed today. Some tech companies are doing better than others these days. Moody's, the credit rating company, reported today that Apple's stockpile of about $150 billion in cash accounts for about 10% of all cash holdings by American companies, and that's not including cash held by the banks.
Meanwhile, Wells Fargo is being accused of not doing enough to help struggling borrowers navigate the agreed-to fixes to mortgage servicing abuses. In federal court in New York City today, the New York State Attorney General said that the nation's fourth largest bank and, by the way, biggest mortgage lender is not complying with last year's $25 billion multi-bank settlement with the Justice Department and with 49 states to end those abusive practices. In a statement, Wells Fargo said the bank had taken voluntary steps to put in place the customer service changes agreed to in that multi-bank statement. Well, three companies making their Wall Street debuts, and that's where we begin tonight's market focus. First, RE/MAX shares. They flew higher after pricing 10 million shares at $22 apiece. That was above the range that it had been seeking. The IPO comes at a time when mortgage rates are inching higher, but that's not a concern for the company's CEO.
They could go lower, but I think most important is that we're at 60-year lows. I bought my first house at 14.5%, and I was thrilled to get 14.5%. So I think anybody over 35 years of age are looking at single digits going, man, this is still cheap money.
I paid 16 5/8%. The stock, anyway, finished the day up 22% to $27 a share. Investors also pushed into shares of Burlington Stores on its first day of trading. The owner of the discount retailer Burlington Coat Factory priced more than 13 million shares at $17 apiece, hoping to tap into the appeal of cheaper clothing in a tough economy. The stock soared by 47%, closed at $25 and a penny.
Empire State Realty Trust, this is the company that owns the Empire State Building, also rose on its first day of trading, but not as much as the others. Shares priced at $13 a share. That was the low end of the expected range. In addition to the Empire State Building, the company also owns a number of retail and office buildings. The stock finished slightly higher at $13.10. Now, another activist investor is trying to shake up a company. This time, Third Point's Dan Loeb is taking aim at Sotheby's. Loeb is raising his stake in the auctioneer and calling for the resignation of the company's CEO on concerns about its strategic direction and vision. Loeb is now Sotheby's largest shareholder. Shares rose fractionally to close at $50 and change. And BlackBerry higher today on a report that Cerberus Capital may be interested in the troubled smartphone maker. Now, according to the Wall Street Journal, the private equity firm is looking into signing a confidentiality agreement that would give it access to BlackBerry's financial information. The company already has an offer for $9 a share from Fairfax Financial. The report follows disclosure that BlackBerry's losses are deeper than first reported. As for the stock today, it rose 0.5% to just under $8 a share.
Coming up, how the big changes coming to the healthcare system may affect care. One of the nation's top hospital CEOs tells us what he's doing to prepare for that. But first, how commodities, treasuries, and currencies performed in today's trade. Heavy volume, lots of delays, all on the inaugural day of new federal and state healthcare insurance exchanges, part of the Affordable Care Act. Healthcare.gov reports that it received 4.7 million unique visitors just yesterday alone. But with so many Americans visiting those online marketplaces, or at least trying to, many encountered technical glitches that kept shoppers from finding out more information and comparing available plans. After several million visitors to New York State's portal, the site had to be taken down for 9 hours overnight in order to boost capacity.
Meanwhile, the renowned Cleveland Clinic says it has not yet been impacted by the new health care law. Joining us now to talk more about how he's preparing for the Affordable Care Act, we're happy to have with us Dr. Toby Cosgrove. He's president and CEO of the Cleveland Clinic. Toby, so nice to have you back on the program.
Nice to be with you, Susie.
So there's more people are going to have access to our healthcare system, but the big worry is, what is it going to do to costs? And what does it do to costs for the Cleveland Clinic?
Well, we know, and we have known this for several years, that we have to reduce the cost of health care, not just for the Cleveland Clinic, but really across the country. We look at it really as a patriotic duty to take down the cost of health care because it's beginning to jeopardize things like education that are important. So we have been working hard to reduce our cost, and we've done several things. For example, over the last couple of years, we've taken $180 million out of our purchasing. We've consolidated services that made them higher quality and lower cost and more efficient. But all of that still means that we're going to be paid less by our private insurers. We're going to be paid less by Medicare for what we do. And we still don't have Medicaid extension in the state of Ohio. And we're concerned that we need to take our costs down still further. So we need to take out about $330 million out of cost for next year.
And you warned, Dr. Cosgrove, that that might include layoffs at the Cleveland clinics. I'm curious, where one of the largest, most respected hospitals in the country, when you cut $300 million out of your budget, where does that come from?
Well, ultimately, we realize that 60% of our costs are related to salaries and benefits. And we're probably going to need to reduce our force ultimately. And we're looking at early retirement. We've offered that to about 3,000 people across our organization. And we'll have to wait and see how that does at reducing our total cost of personnel.
And so this raises questions for a lot of Americans, like what does all of this mean for the quality of health care if that's what the Cleveland Clinic is doing? And we're seeing that a number of hospital systems are merging, and Cleveland Clinic has made some acquisitions in the past. Are you going to be doing more acquisitions? And what does all of this mean for the quality of health care?
Well, we think that one of the ways to make the healthcare system more efficient is by consolidating hospitals and caregivers. And we now see 60% of the hospitals across the United States are part of a system. And that allows us to take costs out of the back end of the healthcare delivery system. It's a little bit like mom and pop stores have gone away over time, and we now see supermarkets. The costs are lower and the quality is better as you begin to consolidate and take those inefficiencies out of the organization.
Are you convinced that the Affordable Care Act will eventually lead to lower premiums, lower costs for people buying health insurance. One CEO of a major health insurance company told me they're going to leave those states where they can't raise premiums enough. In other words, where their profit margins are not going to be enough. So they will go to those states where they can have a high enough profit margin that it makes sense doing business in that state, which says to me they're looking for higher premiums, not lower premiums.
Well, what we're really seeing is the government has expected that healthcare costs are going to go up next year. As you know, the rate of inflation in healthcare has been coming down over the last several years, and it was 3.6 last year. Government is expecting it's going to go up to somewhere about 6% next year, and that's because you've got a lot more people coming into the system. But I don't think we can tell yet, exactly what's going to happen to costs, because we really don't know on several things that could affect it. First of all, we know that the population is getting older. We know we have more chronic disease. We similarly do not know who is going to be insured and who is not, and how much we're going to get paid for that. So we're going to have to wait and see the results of this reorganization of healthcare across the country. It's an experiment that hasn't been done before, and we know we have to change. We're going to change, and we'll see how it turns out.
Real quickly, we just have a few seconds left. We're seeing a lot of new players get into this. You say it's an experiment. Yeah. We're seeing Walgreens, we're seeing CVS having these walk-in clinics. Real quickly, is this a good thing?
Well, what we're seeing is a change in primary care, and I think primary care is going to be more and more taken up by physician's assistants and nurse clinicians. And the reason for that is there's about a 45,000 doctor shortage of primary care physicians across the United States. And so those organizations are beginning to fill a gap. And I think at the end of the day, you'll see physicians practicing at the top of their profession.
A lot of dramatic changes. Thank you so much. Toby Cosgrove, President and CEO at the Cleveland Clinic.
My pleasure.
And that's Nightly Business Report for tonight. I'm Susie Garib. To read more on the stories that we covered tonight, go to our website, nbr.com.
Yeah, I don't think you get a wait sign on that one. I'm Bill Griffith. Have a great evening, everybody. We'll see you again tomorrow.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. We are TheStreet.com.
I'm Susie Garib with a Nightly Business Report news brief. President Obama says he's prepared to negotiate with Republicans about raising the nation's debt limit, but only if they pass a bill to reopen the government that has no restrictions on funding health care. Earlier, the president met with top Wall Street bankers to discuss efforts to push Congress to raise the U.S. borrowing ceiling. On Wall Street today, stocks fell on investor worries about the stalemate in Washington, fears about an extended shutdown, and a report showing only 166,000 private sector jobs were added last month. The Dow lost 58 points, the Nasdaq dropped almost 3, and the S&P off by a point. And 3 large Microsoft shareholders are urging the board to push company founder Bill Gates out as chairman. Be sure to tune into Nightly Business Report right here on your public television station.